All right, so let's jump into it. Let's talk about the markets today and the activity, what we can see based upon price action and the structure of the market. All right, to take a look to see where there were possible some zones to trade from today. So I want to say this: anyone out there who's struggling as a day trader when it comes to the future markets, whether you trade the Nasdaq like myself or the ES, maybe you trade gold, one of the commodities. Whatever you trade when it comes to one of the instruments of trading futures, of course, you're into this business to try to be profitable, right? And I highly recommend anyone that's watching for the first time and you're looking to start your venture into trading futures in 2025, please learn and understand, grasp market structure. I don't know how to beat that concept or word into the minds of so many people. It is extremely important to be able to identify the movement within the market. If you cannot read the market, you are going to extremely struggle trading, no matter what market it is. Don't care if it's Forex or futures, okay? Or options, all right? You have to be able to understand what's going on overall because you want to trade with the banks and institutions, not against them. Understand that. So in this video today, I want to stress the importance of being able to trade and be profitable at least 5 days a week. So let's say you didn't catch a trade 1 or 2 days a week, whatever the case is. It's better not to trade at all than to, start blowing through your capital. All right. It doesn't mean if you're trying to pass a prop firm or you have passed the prop firm challenge and, you are building that account to possibly withdraw and deposit some money and open up a brokerage, your own personal brokerage account. Or if you start to trade with your own money. All right. Now, I want to say this because people always ask, as a beginner trader, what markets should I actually trade? The micro markets. All right. There are tons of micro markets that you can trade, or many micro markets that you can trade right here in futures. Okay. So whether it's the indices, you can trade the Dow, the ES, the NQ. You have to pick your own choice of market you want to trade. Structure is extremely important. So I'm going to just kind of show you, just looking at today's market, okay, we're going to go through that, a strategy in which you can actually trade that is very simplistic if you understand supply and demand, okay? Aggressive areas of buying and selling within the market. You have to be able to understand that. But first and foremost, I'm telling you right now, master market structure before you start tapping into anything else. Now, the strategy just goes simple like this. Identifying structure. Are we making higher highs and higher lows or making lower lows and lower highs? Now, I know people always say, well, how do I, know when the market is actually, reversing or changing its position? Because it can do so, right? I talked about that in video. So please do yourself the biggest favor of all. Get a pen and pad and watch some of the previous videos, from this video going back. And you'll probably get a lot of answers that you are questions to answers that you're actually looking for to be answered within those videos. So please spend some time. Now I'm just going to go through the gist of the strategy right quick. But overall, the trade that I took today, I took a nice 20-point scalp on the Nasdaq. I'm going to break that down for all those who are the Elite Channel supporters. If you want to become an Elite Channel supporter, that is a private community where I break down my trades, go into detail so that you can understand not only referencing market structure, but also profit targets areas, stop loss areas, letting you know and discussing my thought process behind each trade. There are tons of those videos already there. You also get the video playlist and a great video that I covered on market structure for anyone that struggles with that concept. All right. It's only $6.99 a month. That's all it is. The link to it is down in the description portion of the video. But again, all of this is a series of videos, tons of videos there that provide breakdowns on trades that I take, the ones that I posted on the Discord. If you want to join the Discord is free. The link is the first link right down in the description. Again, both of those links are down in the description. Once you choose or click on Elite Channel Supporter, there's going to be 2 tiers that pop up. Make sure to choose the second one for $6.99. But let's go ahead. So to me, I'm looking at the market, and I see bullish momentum or movement coming out of yesterday's trading session, making higher highs and higher lows, right? So somewhere shortly after, hour after 2 hours after London opened up, we did get a push down here, pull back, and then a break of structure below this area here as we move lower. Okay, you see that area? Now there's a low sitting right here too. So right now we're still bullish and looking at what's taking place right here. So then the market turns back around. We get a little push up, all right, pulls back, pushes up again, Okay, pulls back here, breaks structure above this area here, and it slightly breaks above this area right here. So we're bullish to the upside. Now, there were two key zones which some of you may have taken these trades. If not, I'm going to show you. There was a demand zone right here, and there was a break of structure with a demand attached to it right here. All right, there is a difference. Okay, there's a demand. All right, but no break of structure right here. There is a push up. Okay, pull back, and a demand zone right here that I marked. You can see those two rectangular areas. I'm going to show you the trade on both of those right quick, so that you can understand and grasp the meaning behind supply and demand. Demand, in this case here, because we're bullish, if we're bullish, we're looking for demand setups. If we're bearish, then we're looking for supply setups. Like this will be an area of supply because we have aggressive selling. So that's what demand and supply is. Demand, aggressive buying, supply, aggressive selling. Aggressive buying right here, this is a demand zone right here. The market comes back to it. Now, once it comes back to it, we're going to go ahead and mark it up. Whatever your higher time frame chart is, mark it up first. Okay. Again, I'm showing you a trading strategy in which you can make money 5 days a week and become profitable if you can be patient and consistently do so every single day. Again, some days you may not be able to see things correctly, or the market may, like today was probably a little bit confusing to some people because it kind of looks like it's moving sideways, right? But there were still opportunities. If you are not able to read the market correctly, then just stay out of the market that day. Don't force something, okay? Because then that's when people start losing money. Now, this is a demand area, aggressive buying right here. If I see such, then I'm going to go ahead and mark up that zone here on my higher base chart. Then I'm going to move down, scale down to my lower base chart to look for an entry point. My lower base chart from my 120 is going to be my 24 range, all right? Maybe you trade a 60-minute chart and your 5 minutes your entry chart. Again, I'm not saying the charts I trade, they're range-based charts. There is no comparable or comparison in between the two of them, okay? I don't, so please don't ask that because I don't know what is comparable from a 60 range to, excuse me, not 60 range, but from a 60-minute chart to one of the range charts. They are calculated different, okay? You might find if you start thumbing through charts, breaking things down, maybe, testing some different range charts out, you may find something that's comparable to a 5-minute or a 60-minute chart, but it's not going to be and look exactly the same, okay? Because the bars are calculated different, okay? Time-based, calculated based on time. Range is calculated more so on the amount of volume that's being pushed or injected into the market, okay? So, with that said, this is a demand zone. So if I mark this up, I'm going to show you because I'm going to go over to my lower base chart right now and show you the area on the 24 range chart where there was a nice demand zone to trade from. All right. So the larger box is that zone that we just saw on the 120. I'm on my 24 range chart now. So if I have this marked up, once we broke up and made aggressive buying, okay, again, we are looking bullish still because we haven't really made that full-on trend reversal pattern that I talk about in a lot of videos. Again, that's the purpose of watching the videos, because you will pick up on things that I'm talking about patterns and reversal points and things of that nature. All right, so now that we're on the lower base chart, we see the pullback to our right here. This is the pullback, so it breaks up here, okay, and it comes back right here. But there's no, at this point here, there's not a 24 range supply zone, demand zone which we can trade from. So then I just wait. It breaks back up to the upside, and then it starts coming back down to tap inside the zone again. All right. So with that said, let's take a look here. It does come back after right here. All right. And it comes back to the zone again. Now, we've tapped the zone the first time, but we haven't, but there are zones that in which it can still test on the inside. So it came back to the zone right here. Again, here at 9:59, around about 10 o'clock was where there was an opportunity to go long. And let me make sure right quick, because I'm not sure if 10 o'clock there was actually news at that time. 10 o'clock, 8:30. We didn't have news again until 10:30, which was low impact natural gas reserves or storage. Okay, so the market comes back to it. Now, there is a high probability zone resting on the inside, meaning a 24 range zone resting on the inside of our higher base zone. All right, so, okay, so right here, the market is tapped. I'm going to go back to the 120 right quick. Taps the zone for the first time. Back to the zone, okay? So then that, makes it low probability in a sense because we pull back, we tap the zone. But even if the market comes back for a second time, say for example, and taps the zone again, but there is a high probability 24 range zone, still resting on the inside, and it taps it on the inside. Okay, we have a low probability zone right here because it's tapped now. All right, demand zone. But if we have a high probability demand zone resting still on the inside, it comes back and taps the inside of the higher base zone into the 24 range zone, high probability right here, then I'm going to take that entry if it gives me the rejection. Now, where I'm going to be looking for to take the trade back up to, well, if we look at the higher base chart, we have this area right here, which the market can come up, fill this, area here up, and take out liquidity back to the upside. So basically the highs right here, there's liquidity resting at the high right there. So if we go back to the lower base chart, but you can see on the lower base chart, we get the rejection right here. But pay attention to what's going on as far as price action on your lower base chart. We were making swings to the downside, low, lower, high, low, lower, high. Tap the zone right here. Be mindful there are gaps that need to be filled right here as well. But be mindful these are stopping points in which the market can actually react at as well, because these are swings. This here is an area of supply right here. Okay. All right. So, these can be treated as areas of resistance in a sense. Okay. So be mindful of what's going on with price action just as well. It's not a clean shot to the downside where they're just straight gaps to the downside. You got to be mindful of all price action, even little swings or smaller swings on the lower base chart just as well. Okay. Because the market can stop at those. All right. But the aim is going to be, if we get the rejection, maybe to try and take out this area of structure right here to the top hand side at 21,823 or 822. All right, so the market reacts here. We get the first candle close. For those that are more conservative, do yourself a favor. Wait for the break and close right here above 775 and then go long, because then you can aim for these gaps on these candles here to be filled back up to at least this area here around 786. So let's say you got in here at 775 and it goes up to 786. Pick yourself up 10, 11 points pretty quick off that trade right there. All right. And then the market swings back right here. Okay. You see this right here? This is a demand zone right here. You could probably take a trade when it want to pull back right here, but I like to see a demand zone when there's a breaker structure just as well. So it pushed up here, broke up above this high right here, broke structure, and then came back to a new demand zone right here. So you could have taken a trade when it came back like right here. All right, right here, reacted off of there, and then took it back up to the upside again. So there was actually, if you didn't take the trade on the inside of the zone, you could have waited for a pullback to a nice area of demand to go long. Right, that's that first setup there. The next one that follows suit was where it, after rejecting here, pushed up, broke structure right here. There was another demand zone. Okay, now this is a push up pullback where it broke structure to the upside. Okay, right here, above this high right here, comes back, high probability. All right, demand zone resting right here. So again, we just move down to a lower base chart. But before we do that, we need to mark up our zone. Okay, mark up your demand zone, aggressive buying, comes back to it, move down to the lower base chart again. For me, it's a 24 range. It starts with tracing, taps into the what? The 24 range demand. The 120 range demand zone right here, which I just showed you on the higher time frame chart or higher base chart. But we're looking to see if it's going to come inside and tap a 24 range high probability demand zone. Well, there's one resting right here. Why? Because we got the push up, a pullback, aggressive buying, demand, comes back right here and it taps a demand zone. Once it taps the demand zone, gives the rejection, you can go long. Same thing, okay? All right? And you're going to aim for, but be mindful of little swings or where the market can stop at. It can come up here, reject right here, pull back, and then it could be aiming for these areas here, as you can see. Now, and what you did, it came up, you could have gotten into a trade, off the rejection right here, right at maybe 789, but I have to be mindful right here. So I may not take this. If I take this trade here, I got to be mindful of what's going on right here. Price action. I keep saying that over and over. Just because you get to tap into a zone and it reacts, got to be mindful of price action and what's resting right above you. I would be looking for, if I get in here, I know something's going to happen right here possibly. So wait for maybe see if it's going to break above, start breaking into this zone, get a pullback, small little area of demand, then go long and aim for it. So your stop is going to go back below this area right here at 783, and then aim for it to take out at least this high right here at 800. Okay, it's a round number right there. Now, there are gaps right here that the market needs to fill back to the upside. As you can see, the market actually took out this high. It swept, basically broke above liquidity, came back and tested the zone again. Now, at that point, that is a low probability zone on the lower base chart, and it does react off of it. So you have to make the decision at that point if you're going to trade, a second test. Okay, all right, and this is being a low probability zone. It did pay off very well though if you got into that trade, because it went back up and it filled all those gaps back to the upside right here to this zone right here, right, or to this swing, the top end of it right here. Why? Low, lower, high, breaking structure below this area, aggressive selling to the downside. So, this is a situation where the market tapped a demand zone and went right back up to a supply zone, making this a beautiful setup. So I want to show and break down these couple of trade setups today, just kind of looking at the market. And from my point of view, what I saw, because I know these type of videos have helped and continue to help lots of people out there, especially the ones that are part of our community. And if you're not part of the community, you definitely may want to join. So go ahead and become a member down below by clicking on the Discord. You can join the Discord. And if you want to join and become an elite channel supporter as well, you can definitely do that as well. Those type of videos, the additional video content within that private community has helped a lot of people out. And I know, because you guys have reached out to me and leave me DMs or respond on the YouTube channel, and I greatly appreciate that. It lets me know that most of you always say, keep the videos coming, Mike. Thank you for the content. Thank you for, being as thorough and detailed as possible. So I want to say thank you to all those who are elite channel supporters. Thank you for supporting my efforts as not only a trader, but a content creator. And this is the reason why I continue to do so in making this video content, because I know you're not going to find it everywhere where somebody's being as detailed as possible. I'm trying my best to do so. So hopefully this content is really helping people. Some of you have commented and said this has been a life-changing experience for you, and I greatly appreciate that. That's the goal here, is to really see people succeed, and not just succeed, but even beginners become inspired to want to really make either a living or do this part-time, or just open up the door to see what this consists of, to see if they can do it or not. It's definitely doable. It's highly rewarding, I would say that, but it is very risky as well. So please keep that in mind. It's not for everyone, but you definitely have to spend time understanding and mastering market structure, coming up with a strategy, back testing it. Watch the video here. The video's here. I got a strategy. I break it down as much as I can. So I just want to say thank you to everyone out there who definitely supports my efforts as a trader and a content creator, discussing and sharing my experience and the knowledge that I have within the markets, and definitely how I trade each and every day. And everybody trades different, so this is how I do it. Again, I always say that if it doesn't work for you, whatever it is you learn from here or maybe somewhere else, then find something that does work for you. Okay, don't waste your time. Don't spin wheels, because not everybody's going to be able to understand. I, for one, had to come to the mindset many years back of drawing up and coming up with a clear slate for myself, starting from scratch again. Bumping my head a few times, but it wasn't until I actually mastered market structure. I know I keep saying that term because it's extremely important, and started looking at the charts for what they were and looking at structure. That's when things changed for me 100%. So I do want to say that, okay? But outside of that, that's it. Just want to share that today. Again, if you are looking for a trading strategy in which you can make money, 5 days a week and become consistently profitable, this is the video. This is the channel. Spend some time on the channel watching the videos, and I wish you much success. All right. Outside of that, that's all I have, guys. I appreciate you tuning in. If you're not a current subscriber, please take the time to go ahead and subscribe by clicking the sub button down below. Make sure to turn your post notifications on so you do not miss any of the uploaded content by simply clicking the bell once you click on subscribe. Okay. If you do me the biggest favor, if you found some value, if this helped you out any kind of way, if you said, I'm going to give this a shot, I want to watch more video content, I want to see what this is all about. If you've already been, following the channel and the videos have been helping you out, and you're finding, seeing the light at the other end of the tunnel, just some glimmer of hope, or already successful now by watching the content, drop me a like. Please, guys, I appreciate it. Drop and click on that thumbs up button. I do this for a reason, so please give something back to me in reference to, clicking that like button. It's just not for me. It's for the community. I want to continue seeing this community grow so other people, and that's the way this platform works. That's the way it works here, is that You know what you guys do, and by sharing and clicking the like button, it helps the algorithm get the video content where it needs to go and in front of more people who may be interested in this same type of information. So, you know, I'm a firm believer of sharing knowledge and information and passing it along, and that's what I'm doing, what I'm trying to do here. Okay, thank you guys, I appreciate it. See you in the next one.